This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this StockBox interview.
Joining us today is Jonathan Owen, the CEO of Metals One, following, of course, the PEA from the company and also the news about the equity fundraise. So thank you very much for joining us, Jonathan. How are you?
I'm good. Good to see you, Mark.
Yeah, good to see you. Good to see you, Jonathan. Thank you for your time. So let's just first of all talk about the PEA here. So generally from reading that RNS there, the theme I was picking up really was that the project's economics are really quite sensitive to the commodity prices of nickel, suggesting that perhaps the project has significant upside potential, but really only if nickel prices improve. And at the moment, it's perhaps not that worth pursuing. I mean, what's your take from it?
Yeah, I think we have to look at the PEA as a PEA, and maybe it's just worth revisiting what exactly it is. It's really a study to determine, or to help us internally determine what to do with this project next. Do we can it, shelve it, or develop it? And what we're seeing here is pretty good NPV5 numbers, but we see a PEA or an economic model that's highly sensitive to nickel price. So if you have a view that nickel prices will rebound from today's doldrums, then this would provide you great optionality to ride that rebound. So to put that in perspective, we're currently sitting at around about $15,000 a ton nickel on spot price. Only 2-3 years ago, that was near $50,000. Now, if you see, the pressure that the flood of Indonesian cheap nickel has into the market has done in terms of suppressing the price, that won't last forever. They're already running out of high grade nickel. They're having to import nickel ore from the Philippines. That adds cost and supply chain risk. And then you compound that then with the issues they have around the high carbon footprint for their products in the perspective of these are nickel sulfates going ideally into the green transition, so into EV batteries. So it'd be ironic to be acquiring nickel from high carbon sources when you can get it from Finland on your doorstep at literally 50th of the carbon footprint. So that's the play that we have to offer. It's not a project we're going to develop today. It is a project that we will be developing in the future. We are securing these licenses for longer term, and we will continue to submit this asset to the European Union to be seen as a strategic project, and all the benefit from the trappings that come with that in terms of project financing, project fast tracking. When we do press the button to invest here.
Okay, so just thinking about the play going forward, I know the PEA mentioned that a 10% change in metal prices leads to a 76 million change in NPV for Rutavara and 79 million for Paltamo. So, I mean, you mentioned there 50,000 was the price just a few years ago there. That's a huge spike. We look at the chart there, back down to 15,000 now. I mean, you're still going for the EU Critical Raw Materials Act. How do you see that supply pipe of the nickel prices? I mean, was that spike due to a sudden fear and then sort of oversupply? And do we generally see that sort of stabilizing and sort of slowly going up again? What do you think?
Well, the nickel market is quite volatile. It is one of the lesser traded commodities, so it is therefore more volatile. We saw spikes while we were in the IPO process, but then we saw the Indonesian nickel starting to flood the market, which dampened that somewhat. So demand will continue to increase for Class 1 high quality nickel sulfates. Supply will no doubt continue to grow, but the gap will widen as many analysts forecast. So it'll come, and I'm sure it'll be volatile. And this is one to keep an eye on or to hold.
Right. Okay. And from your point of view, as you say, the PEA was really that first stage gate. Do we continue? Do we dump? And at the moment, the feeling is that you're going to continue. You're going to hold the licenses, but really you're not going to do much more than going for that EU Critical Raw Materials Act, which I think you're ready to apply for now.
Correct. So the PEA provides us with the material to support the application. It's the technical materials that we need to provide. So we push forward with that. We maintain the licenses.
Okay.
I'm sure we'll talk about the equity financing that we announced shortly, but that will support us and our strategy to broaden or diversify our commodity base into the wider critical minerals space.
Okay. And do you think, depending on do you think there's a high chance that the EU will go for the project here, depending on, I guess, how serious they are about securing critical materials like nickel?
Yeah, I'm pretty confident. There may be a staged approach to this. I mean, bear in mind that we ran the PEA on a relatively small volume of black schist. That's 57 million tons of assets. Our view is always to develop that or expand that up to around about 200 million tons. That's where we see a real world-class asset being developed in that sort of order of magnitude. So there is more work to do to continue to expand that asset. The EU may take a view that they want to support us to do that. And may help us fast track that process financially and in terms of permitting. That's what we're playing for.
Okay. So on going forward then, and of course the fundraise and the direction of the company in the near term. So the fundraise here, you've got 600,000 via CLN, and is it 2.4 through equity with warrants, and then 100,000, which is effectively an open offer to existing shareholders?
Yeah, so it generates 600,000. The convertible loan note in the short term, as in now, provides £600,000 working capital for the immediate term, and to support I'll secure our licenses in the black schist for the long term. And then the equity fundraise delivers net 2.4 million, which will go into our war chest, which we're very pleased about. It's it's a particularly difficult market at the moment to raise capital, and we see a lot of our peers, going hand to mouth, raising money, small amounts of money, spending it, having to go back. We've taken the decision to try and do this in one go. Yes, we as shareholders, we are all shareholders on the board, have suffered the pain that comes with dilution. But this puts the company, and we have to put the company first, in a position to move ahead with momentum and a good war chest to support its strategy. So
what is the plan then, Jonathan, in the short term here, with that war chest, as you say, that you're getting now? What's the direction of the company? You're looking to diversify into other projects? You're looking to look more into Norway, where you've got your current joint venture there going?
No, exactly. So this war chest allows us to diversify our portfolio, our exposure to other commodities away from nickel, so into potentially copper and other strategic and critical minerals. And geographically, this Europe is on our doorstep. It's our focus area, but we're not ruling out other jurisdictions. So, as you can imagine, we have a raft of opportunities to consider. Others will come along, no doubt. But we are busy, so expect news flow.
Okay. Well, thank you very much for your time, Jonathan Owen, the CEO of Metals One.
Thank you, Mark.
If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.